Today I would like to analyze Novo Nordisk, one of the biggest pharmaceutical companies in the world. If we take a look at the stock price, we can see in the 1-year chart we are down around 51%, so probably one of the worst performing stocks on the stock market. So we're going to take a look at the financials to find out if this company is a good buy right now. The first thing we can recognize is the huge market cap of 273.7 billion US dollar. This makes Novo Nordisk the fourth largest pharmaceutical company in the world. We also have a dividend yield of around 2.83%, which we can see here did grow in a good rate in the last years. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. So in 2020, the revenue was around 126.9 billion Danish crowns. This was a 4% increase from 2019, so a decent growth. In 2021, we had around 11% growth. Then in 2022, around 25.6% growth. So this is very good, I would say. But then again, 2023, we saw the great growth around 31%. And then 2024, around 25% growth. So overall, I think this company has a very good revenue growth in the last 5 years. So it's a check here. The next thing we're looking for is free cash flow growth in the last 5 years. The free cash flow is very important because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So in 2020, the free cash flow was around 46 billion Danish crowns. This was a 22% increase from 2019. This was a very good growth. Then in 2021, we had the growth around 5.5%. 2022, around 37%. So this is a very big growth as well. Then in 2023, around 24% growth. This is something we like to see. But then in 2024, we saw the decline around 11%. So this is something we don't like to see, but overall in the last 5 years, we had a good growth. So it's still a check here as well. If we take a look at the operating cash flow, we can see we had a good growth since 2020 in every year, even in 2024, around 11%. But in 2024, we had the 11% decline in the free cash flow. So the reason for that is we had the higher capital expenditures. We can see here it decreased over 20 billion crowns. And we also had the acquisition around 82 billion crowns. So this company investing in this business and probably also buying other companies, this is a good thing, I would say. And the business is still growing, so I think this company doing the right thing. The next thing we're looking for is a free cash flow yield over 4%. This can also tell us about the valuation of this company. The higher the free cash flow yield, the higher the indication for undervaluation. So what we're going to do now, we're going to take the free cash flow from 2024. So this is around 73.8 billion. Then we're going to divide it with the current market capitalization, 1,798. Then we're going to get the free cash flow yield for 2024. So the number we will get is around 4.10%. So this is a good number, I would say. It's over 4%, so it's a check here, and we like to see that. And I think the free cash flow could be even higher because the acquisition and also the capital expenditures were higher. So actually, this company could have a higher free cash flow as well. So I think we should also make some assumptions about the free cash flow in the future. If we ask ChatGPT, we can see here in 2025, the free cash flow could be around 85 billion Danish crowns. In 2026, around 110 billion Danish crowns. In 2027, around 136 billion Danish crowns. So I'm not sure if these numbers are realistic. So maybe we just assume for 2027, we can reach around 120 billion Danish crowns. So we're going to take this number, 120, we're going to divide it with the current market capitalization, 1,798. Then we're going to get the free cash flow yield for 2027 with our free cash flow assumptions. So let me know in the comment if you think this number is realistic as well. Then we would get the free cash flow yield around 6.67%. So I think this is a good number actually. It can be an indication for undervaluation. The next thing we're looking for is the debt to free cash flow ratio under 5. This means the company can pay back the debt with the free cash flow in under 5 years. A very important number because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So first we're going to take a look at the long-term debt. We can see here around 84.2 billion Danish crowns. Then we're gonna add the short-term debt as well. We can see here around 5.8, but we need to use this number as well. So all in all, I would say around 12 billion Danish crowns. Then we're gonna divide this with the current free cash flow. This is 73.8 billion. And then we're gonna get the ratios that we're looking for. So the number we're gonna get is around 1.3. So this is a great number actually. It's under 5, so it's a check here. And this means we need to pay a little bit over 1 year back the debt with the free cash flow. So it's a great number. We can also take a look at the cash on hand, how much money this company has in the bank. We can see here around 26 billion Danish crowns. So I think this is also a good amount as well. So I think overall this company has a great balance sheet. The next thing we're looking for is the enterprise valuation to free cash flow ratio under 25. So this can also tell us about the valuation of this company. The lower the number gets, the higher the indication for undervaluation. So we want to see a low number here. So first we're going to calculate the enterprise valuation. This is the current market cap, 1,798. We're going to add the debt as well. So the debt was around 96.2. We're going to take minus the cash, 26.3. So this is the enterprise valuation then. So let's calculate this quickly. So the number you're going to get would be around 1,867.9. So this is how much the whole company is worth. Then we're going to divide it with the current free cash flow, 73.8. And then we're going to get the number around 25.3. So I think this is a good number. It's not a check here because it's over 25, but it's close. So I think this company could be fair valued right now. We can also calculate this number with the free cash flow assumptions for 2027. So this would be 120. So then we're going to get a different number as well. So the number we get would be around 15.56. So this is actually a great number. So now this company does look undervalued, but only if we can assume that the free cash flow can grow to 120 until 2027. So if you believe the free cash flow will grow like this, I think this company does look undervalued right now. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that especially we think the company is undervalued. And we can see here repurchase of common stock in 2020 around 17 billion Danish crowns. And we can see the number actually increased over the years. So yes, this company does buybacks and the shares outstanding decreasing. So there's a check here and we like to see that. I would like to give my conclusion about this company. So let's start with a positive. So I think we had a very good revenue growth in the last 5 years. We also had a good free cash flow growth as well. This is something we really like to see. I think we have a good balance sheet as well. This means a low amount of debt and a good amount of cash on hand. The current free cash flow yield around 4.1% is also looking quite good. And especially for companies that can continue to grow the free cash flow, I think this is a decent free cash flow yield. So in 2027, with our free cash flow assumptions, the free cash flow yield could be around 6.67%, and I think this could look undervalued right now. The enterprise valuation to free cash flow ratio around 25.3 is also looking quite good, so right now the company could be fair valued, but if they can continue to grow the free cash flow in 2027, the ratio would be around 15.56, and I think this would look undervalued. We also have stock buybacks. This is something we like to see when we think the company is undervalued. So this can help the stock price to increase. And we see in the 1 year chart, we are down around 51%. So I think if this company can continue to grow the free cash flow again, I think the stock price would be way higher in the future. If you found this video helpful, don't forget to like and comment and subscribe for more content.